You've upped your risk though, good morning to you, sir, from 2 to 3. What does that mean?
Well, 2 to us is a little bit more aggressive. Prior to Brexit, we moved it to a more neutral posture, which for us is 3. We've now been slowly creeping up and selectively putting risk back on since Brexit.
You're putting risk back on, and yet the markets are trading at levels which are far from cheap on many parameters, whether it be PEs, whether it be Cape valuations that have long worried a lot of the market out there. The market isn't cheap, and yet you're prepared to put more risk on at record levels.
Well, it's not one big market. There are many slices in the market. For instance, if you look at Japan, that market is down substantially year to date. Brexit is a call to arm for policymakers. What we see is an upper house election in Japan, which will usher in constitutional change, focused primarily on the military, but there will be also some features, we believe, that will allow monetary and fiscal to come closer together, be a little bit less independent. So that's a market that's inexpensive. There are catalysts immediately ahead. Latin America is one of the few places that's not going off the guardrails politically. Everybody else is moving out to the edges. They're actually coming back home to a more business-friendly. So there are areas of the world that are not at record levels where change is actually good.
You say this, but all based on the premise that the US market is tracking high, so you start to look for value elsewhere. What if the US market can't continue its run? I mean, a lot of people have been writing this morning, I tweeted one out, that there is some momentum on the markets. When you've been at such lows, you test record peaks, the market typically will go higher 12 months after that. But what if the US market doesn't? There isn't a re-rating of stocks stateside based on earnings. That's one of the expectations. What if the US market falls? Global stocks, global equities will struggle to perform under that scenario, won't they?
Well, that's not our expectation, but you're right, they would. We actually think that we're very close to earnings inflecting. The big pothole...
Inflecting positively?
Positively, yes. The big pothole in earnings worldwide has been the commodity tumble. We had a several-year come down in commodities. And if you look at most earnings, that's been the big negative. That's turning up. This season, it's too early to tell, but we have 3 barometers. I'm not speaking about the companies, but Alcoa, Daimler, Samsung. There's signs that we may be inflecting upward for earnings.
Well,
rates are very low.